My guest today on StansberryInvestor.com is warning that inflation could be a major storm cloud in an otherwise sunny outlook for the summer. Stephen Moore is an advisor with FreedomWorks. He's also the former economic advisor to President Donald Trump. He is also the co-author of Trumponomics Inside the America First Plan to Revive the American Economy. Steve, good to be back with you.
Thank you for having me.
So you are issuing a serious warning here. The inflation numbers are concerning you.
Well, I think they're concerning everyone. We got some pretty bad numbers for April, and we continued to see prices increase for a couple of reasons. One is you're seeing supply chain problems where due to a lack of workers in some cases, the problems with some of these pipelines and other kind of issues with respect to production have lowered the supply of some of the goods and services, especially things like gasoline. So where I live, we saw a huge spike in gasoline prices and shortages. And then you've got, the problem of the massive amount of national debt and the amount of money that is being printed in Washington and the amount of borrowing, which is in the multi-trillions of dollars. And, inflation is just too many dollars chasing too few goods. So when you have that kind of massive amount of unpaid for spending, and having to run into the credit markets and issue bonds like that, a natural repercussion would be higher inflation and higher interest rates. And we're starting to see the inflation impact. We haven't seen interest rates really impacted heavily, but if the inflation continues, we will see interest rates follow.
And you've said if we continue at this pace, at this annualized pace, we could see numbers as high as like 9% inflation.
Well, we could. I want to be clear on this. I don't think that's likely. I mean, we could. What I really meant to say was, if we had, 10 or 11 more months of the kind of inflation numbers we saw in April, then yes, that would be on a compounded basis. That would be 8 or 9% inflation. But I don't think that's going to happen. I don't think it's very likely. I think we're looking at potentially inflation of, 4 or 5%. Now that's not a tragedy, but it's still a lot more inflation than we've been used to for the last decade or so, where you saw inflation rates, in the 2% range, 1 to 3%. So, I don't want to be apocalyptic here, because I do think, we were on the verge of an economic recovery that could be very powerful. But I think we need to really worry about what happens with if inflation starts to rise and that affects interest rates, and we don't do anything about it. And the big worry that I would have is, we're already seeing this inflation rate, and Joe Biden has 2 more $2 trillion spending bills he wants to do. Well, those would be, in my opinion, extremely inadvisable right now, given, that we're already seeing these smoke alarms of inflation.
Interesting. Well, the Fed, did warn that we would see, pockets of transitory inflation. But do you think they're going about it the right way? Are they prepared? It's obviously on their radar, Steve.
Well, that's a tough question. Let me put it like this. I've been listening. Everybody's listening very closely to what Chairman Powell has been saying about inflation, and I think he's been somewhat behind the curve a little bit. Not majorly, but, a month or two ago, he was saying, I don't see any signs of inflation. He was just wrong, inflation. And then we saw this big inflation number, and, Americans could see it, right? They could see it at the grocery store. They could see it at the gas pump. They could see it, when they went to the hardware store and tried to buy lumber or try to buy an airline ticket. Now, I just checked this morning, the tickets, those prices are rising. So you're just seeing that happen throughout the economy. And the Fed has sounded a little out of touch. They're not really, I think, aligned with what's happening out in Main Street, USA. So I am a little nervous that Powell doesn't sound more resolute in attacking this inflation before it gets out of control.
Interesting. And speaking about rising prices, former President Donald Trump coming out saying that the rise in lumber prices, he's blaming President Joe Biden for this, saying that that's what's weighing down on the housing market. Is that a fair criticism?
Well, lumber prices certainly have more than tripled. We have a construction project going on in our house, and the construction costs just keep going up, in no small part because of a shortage of construction workers, but B, because of the higher prices of inputs like lumber. how much of this is Biden responsible for? I think, a good deal of it, because I really think it's being, the inflation is really being driven by bad fiscal policy. We keep dumping what I call helicopter money out of helicopter windows. And Joe Biden just a week or two ago announced we're going to give $3,000 per child for every family, just free money. Well, that sounds great. Americans love free money, but there is no such thing as free money. So if you're going to continue to just shower the economy with cheap money, then you're going to lower the value of every dollar out there. I mean, this is just math, right? And then that will mean that every dollar out there is worth less. And that means people's, wages and salaries and income, their purchasing power is reduced. And so it's one thing to remember about inflation is that inflation is a regressive tax on the lowest income people. So, a millionaire or billionaire doesn't really feel the effect of inflation. Somebody working on a $30,000 or $40,000 annual income, they really feel the impact of those higher prices on their real income.
Switching gears here, Steve, I want to get your thoughts on this apparent and clear race for central banks all rushing to issue a digital currency. And now we have the US Federal Reserve talking about saying they're going to be seriously evaluating it this summer in various papers and experiments. Thoughts on this? What are the implications if we are headed towards a digital currency society?
Well, it does, Jerome Powell mentioned a few days ago that they're looking at creating some kind of dollar-based digital currency, which would be obviously a new kid on the block if that happened. And, that's going to be an interesting new entrant. We'll see how that would affect these other digital currencies that are cryptos like, Bitcoin. So look, the central banks don't like cryptocurrencies, right? They don't like the competition. And that's what I do like about cryptocurrencies. And by the way, I'm not recommending that people buy them, but I think the presence of cryptocurrencies as an alternative to buying dollars or euros or yen or yuan is a positive thing, because they create a competition and they have a disciplining effect on the U.S. Federal Reserve Board, the ECB, and all of these central banks. And that's a good thing, because it's not just the United States that's borrowing huge amounts of money. Almost virtually every country in the world is. And that means they're devaluing their currencies. And that's why, you've seen in recent months, a nice spike up in the price of some of these cryptos. Obviously, Bitcoin's had a really tough month or so. I like the idea of having these alternatives, and I'm not sure having a digital dollar-based currency like the Fed is talking about is going to necessarily mean that people stop buying other cryptos, because for both financial privacy reasons and also because they don't trust central bankers, this circles right into our conversation about inflation. If you think inflation is just a devaluation of a currency. And the way you protect yourself is to get out of that currency. And there are a lot of different ways you can do that. You can buy gold, you can buy silver, you can buy other, real estate assets. But one way of doing it is buying an alternative currency like crypto. So I don't think cryptos are going away. There's now a lot of competition in that market as well. And I think that's a great thing.
Finally, Steve, just to wrap, last time you were on, I asked you to give a grade to President Trump in power, and you were very fair in your assessment. I'm going to ask you now, what would you give President Biden thus far?
A very poor grade. And, I'm very disappointed in Biden. I was really hoping that if Biden won, obviously I wanted Donald Trump to win, but I was hoping that if Biden won, he would be a kind of a moderate, Bill Clinton type of Democrat. And obviously he's been anything but that. He's lurched way to the left on economic policy, whether it's regulation, whether it's energy policy, whether it's, the massive trillions of dollars that are being spent. All of these things, I think, have had negative impacts on the economy. And I think there's 2 or 3 major bills that he's trying to push through Congress right now. For example, a labor bill that would eliminate state right to work laws, which would have a very negative effect on American business. He also wants a bill that would change all the voting rules, and that's very controversial, but it gets rid of voter ID. I think that's really a dangerous thing. And then you've got the the attempt to make Washington D.C. a state and the ending of the filibuster, and all of these things I think are coming from the far left. You've got the Green New Deal that's being masqueraded as an infrastructure bill. So it's disappointing me. I mean, I remember when Biden gave his State of the Union speech and he talked about unifying the country and unity, and so far it's been everything with straight Democratic votes. And I think it's a bad thing for the country, and I think it's a bad thing for Biden. I think at this point, Barack Obama had about a 67% approval rating at this stage, and Biden's just barely over 50%. So I think he should, if I were advising him, I'd move him way back to the middle ground. And I think, that's what the American people thought they were getting when they voted for him. And I think it would be good for financial markets and the economy as well. We'll see, we'll see whether he can pivot back to the middle. So far, there aren't any indications that he's prepared to do that.
I guess just final thoughts here, Steve, just in regards to the illusion of the health of the economy. I mean, I live here in New York City. If you go out, you can't even get a restaurant table these days, whether it's for a lack of restaurant workers or whatever. There are people who are out, they're spending their money. We're talking about pent-up demand. How accurate of a depiction is that? Do you think this is going to be short-lived and all of a sudden people are going to find themselves without that extra pocket change? Or what do you make of this?
Oh, I'm glad you asked that question, because we sort of buried the lead. Look, I think I'm very, very optimistic about the U.S. economy for the rest of this year for exactly the reasons that you just mentioned. I mean, my goodness, we have this vaccine, that the vaccine is the stimulus, right? I want people to understand that. It's not, spending $2 trillion doesn't stimulate the economy, but giving 150 million Americans a vaccine that allows them to get back out and businesses to reopen and people back on the job and people going to stores. I mean, I tried to get, an airline reservation, for this summer, and, a lot of the resorts and hotels are filling up.
Yeah,
that's great. It's great. So we are on the cusp of a big recovery. And all we really need from Washington right now is just get out of the way. Just stop doing things. Stop, because almost everything they're doing is actually making the recovery slower rather than the kind of boom that we should. And I think we'll have. I think for the rest of the year, I'm pretty optimistic. I think we're looking at, 5, 6, 7% rates of growth, which are great. What worries me is the hangover effect we'll see next year in 2023 from all the debt spending.
Right. Absolutely. Steve Moore, thank you so much for your insights. Always a pleasure having you on. Come back.
Thank you. Anytime.
Investor.com. And thank you all for watching. We'll have more great content in your video. Be sure to stay tuned. I know Steve Moore's dog. We'll be here. Thank you for watching. And if you have not done so yet, sign up to watch my exclusive interview with Peter Tuchman, the most iconic trader from the floor of the New York Stock Exchange. You can only watch it by signing up at DanielaCambone.com. It's free. It's great. Access it. That's it for me. I'm Daniela Cambone.